Good morning, traders. It's Chris Buss with Traders Profit Compass with your morning look at markets for Tuesday, October 27th. Let's get started. Okay, it's just about 10 minutes till 7 as I begin the video. I took a quick look at futures. They're up about 0.3% across the board. They were trading flat for quite a while, but they've made a little bounce here in the last 15 minutes. On the blog site, I don't have the charts here, but I noted that yesterday was a 90% down day in volume, and I've got the charts on the blog. And over the weekend, I had also posted the AD percent for the different market sectors: mid cap, large cap, small cap, etc., that had all remained on buy signals from the September lows, noting that all were on buy signals except the NDX. That's all changed. They all lost their buy signals yesterday. Now that doesn't mean they're on a sell signal. It just means that they're not on a buy signal anymore. So usually what it takes to correct that technical situation is one of two things: either a 90% up day or back-to-back 80% up days. So that's what we're, at least by that measure, that's what we're waiting for on that particular signal. Now in September, it's interesting to note that we also had a 90% down day. But 2 days later, we had a 90% up day, so it negated it and then put the indexes back on track to be on buy signals. What was also interesting yesterday is I put my extremometer put to call ratio chart on the blog site. For the first time since May, we had some extreme put buying. Now it just tripped the threshold. It wasn't some kind of massive put buying spike, but it's notable because, I mean, it's the first time since May. So there has been a little bit of fear coming into the market, and that's something that I'm going to watch very closely going forward. That put to call ratio in the past has been excellent at calling bottoms based on, extreme fear coming into the market. Now, that doesn't mean we're going to get that. All I'm saying is if we do, that measure has been very good. It nailed the March low. It nailed the December 18 low. And if you look at that chart on the blog, you'll see how good it is at calling bottoms. It's not very good at calling tops, I will say that. So let's get into the charts. I got a lot of charts to show you this morning, so I want to move rather quickly. Decided to show the 4-hour chart on SPY today. Got a really nice downtrend channel that we can follow. You can see here yesterday we took a pretty deep look below the channel and recovered it. We've got our 341.50 marked here in red. That had been support, is now resistance. And what I want you to take note of is an area that I've kind of got in my crosshairs as a potential place to hold if we get some more selling, and that's down here at 332.50. That lines up with the 61.8 retracement of the up move. So we go up, we retrace 61.8%, brings us back into this 332 area, and that aligns really well with this the large volume over price bars here. So maybe we go up, test resistance, and then come back down over the days ahead. And 332.50 would be a nice technical spot to hold in the days ahead. Now, if we don't hold it, then of course we'll probably come down to the bottom of the box, down towards 320 like we've talked about, which after all is the technical target. Once you break out of a well-defined trading range, when you come back in, the target becomes the bottom of the prior box. So that would be, if 332.50 were to hold and we get a big bounce, that would be a big win, because we would only have gone down halfway of this box before re-emerging. So I thought this was a really interesting look. SPY 30-minute just gives, an exploded view of the price action. We did have a overhead gap that we left behind that will need to get filled at some point in time in the future. We took a look inside this $3 gap. We did not fill it. We came about 50 cents shy. I think that fill is 335 even. So we bounced up. Now, places today to look for resistance would be either here at 341.50, which is a very common technical move, breakdown, back test, revisit the scene of the crime, and then fail, or come up here to the gap and then fail. And then the third option is, of course, just, blast off. I doubt you're going to see that today, but got to be ready for everything, right? And then, of course, if we were to break yesterday's low, then that would bring in more selling. QQQ, 4-hour view, same thing. Very nice channel here. I've marked with green ellipses places where I would look for a hold. The 61.8 retracement is right here at 275. That aligns really well with a gap that closes at 275. And then the next level is 270. And that aligns really well with this high volume over price bar. And then, if 270 doesn't hold, then you're back at the bottom of the box at 260. To get a buy signal, you need a break above the channel with a hold, and then that would be your reclaim of 282, and then your breakout would be your technical buy signal on the 4-hour. Moving on to the 30-minute, no gap on the Qs. We reached up to the top of the channel, then we let go and found the bottom of the channel and bounced. Your overhead resistance levels today would be at 282, and then you've got a lot of overhead resistance in here at 283.50. So that would be my upper limits for today. 283.50 and possibly 284 at the top of the gap, top of the channel, and then back down. The indicators are all in their bearish regimes, although there's a bull PPO cross working right here. You may see a push up and then a rollover below the zero line like we've seen in the past. To get a technical buy on the 30-minute, you need a breakout of the downtrend channel. IWM, 2-hour here. All things considered, IWM is still in a better technical posture than SPY and QQQ. This was the big, reflation push. Now we've got some consolidation. You could easily construe this as a bull flag, where if you got a breakout above certainly 164, then you'd be targeting 167 and above. You can see the PPO is still down here at the 0 line. It did put in a bearish cross here yesterday, but it's, if it wanted to turn up, it could do that. Certainly, bulls did not want to see this roll over here like that, but it's still in a much better position than what we just saw on the SPY and QQQ. So yesterday, price reached down into this gap. You can see it did not fill it yet, so that remains to be filled. And there's a bunch of gaps down here below, but we'll worry about those down the road. And there was an overhead gap left behind yesterday between basically 161 and 163. So job one today for bulls is to recapture 160, and filling this gap here would be a major victory. Any break below this 158.50 would probably bring in more sellers and fill that gap. 30-minute chart. One thing I did here, and this is just for your viewing pleasure, if you will, whenever I see or there is a drop, a dramatic drop during the day, one thing I do intraday, especially if I'm trading it, is I drop in the Fibonacci retracements. So here was the high, here was the low, to look for where bounces might lead and where rejections might occur. So just looking at this, price stopped yesterday right at the 38%. Here is technical resistance at 160. That aligns really well with the 50% bounce zone. And then the 61.8 aligns really well with the overhead gap. So those would be places this morning where if I was actively trading it, I would be looking for resistance points to objectively reinitiate, a short position, depending on what the market's doing, etc. And then look for continuation of this downtrend. Quick run through the FANG names. Now, all of these guys, starting with Microsoft tonight, they're all reporting this week. So these guys might go into, suspended animation mode. Of course, that's not a prediction. It's just what might happen. Some of these may run into earnings. I don't know. They haven't done that so far, so I'm not sure if everybody's going to get all bullish over the next 2 days, given what just happened Monday. But let's take a look. You'll remember the gap up was on Snap earnings, had a push higher, fell apart yesterday, came down, took a look into this big gap, and then saved it by the end of the day. If I were trading this actively today, 278.75 would be a level to look for a recapture, and that could be a place where you could take a long and look for a push higher. And then if price moved back into the gap, that would be a place to possibly get short. And keep in mind this uptrend line, that should act as support on the way down. I don't know if there's enough there to, get all excited, either bullish or bearish, but, take each level as it comes, and if you're interested in trading it, those are the levels. Apple had a good day, relatively speaking, yesterday. Still in a you know, significant, well-defined downtrend, came down here to this 113 that we have marked as places where it has held in the past. It held yesterday, got a nice bounce back up to resistance, and essentially closed flat. Now today, if you were to get a break above 115, that would be a break of the downtrend line. I think you can get long there and see if it gets a push, into earnings. But if it doesn't, I think 113 is your either 115 if you want to short it right here if it doesn't look like it can get through. But the real level for a problem is losing 113. If it does that, then you're looking at 110 relatively quickly, and then potentially down here. I would expect that to only happen after earnings, but you never know. Tesla, I can say one thing for sure, that we've had the levels nailed on this. We talked about 410, which has held three times here as well as back here. And we noted that 420 was an overhead sticking point, and yesterday it traded right in that range. Today, if you get a breakout above 420, I think you can take it long and look for 430. For those on the daily chart, I think price needs to get above 430 to get on the right side of this chart and look for 450. Until that happens, I would be a little skeptical. But if it breaks above 430, I think it's a definite long. If it breaks below 410, it's a definite short. I said it yesterday in the trading room. Something seems really wrong with Microsoft. For one, bad technical break here. And we had this nailed all the way. We talked about 213. We talked about if that broke, you're going to find 210 really fast. And, 2 hours later, here it was at slightly undercutting 210 and then bringing it back above. But no bounce. Where the broad market had a nice bounce into the close, this barely had anything. And it underperformed. It was down almost 3%, double what the indexes were down. It just seems really, really heavy. Now, on earnings, of course, something big will probably happen. You may get a push back up here to 213, or it may gap lower down here towards 205. But below 209.50, I think targets that 205, and as long as it holds 209.50, it can make a push up to 213. But note, that's going to be big resistance now on the way back up because of all this trading. That'll be a little bit tougher to get through than it was in the past. Amazon had a breakout. I put on the fib retracements. It was stopped at the 38% level and came back. Now today, I think it's all about 3,200. I think 3,200 and above, you can be long, and 3,200 and below, I think you can be short. And I think you got $50 on either side to shoot for in those trades. So PPO still bearish. RSI making a little push slightly above 50. If PPO can break above 0 and then RSI break above as well, earnings are Thursday. maybe you get a 2-day run and get a push up here towards 3250, 3300 into the earnings announcement. Google lost this 1590 level. I think that's your pivot for today. If it runs into trouble at 1590, I think you can initiate an objective short with a stop just above and then look for a move back down to 1570. Or if it breaks above, look for a move back to 1610. This bull flag setup was essentially foiled and negated by the fake breakout and then pull back in. So this bull flag is, no longer in effect right now. That was a beautiful setup, and I was looking for higher, and of course it failed. Netflix, short term, all about 490. It's got a break above, and then you've got room to this downtrend line, but then potentially a break above 505, and then you've got a $20 gap fill to play for. So that's something to watch on the upside. On the downside, if it has trouble at 490, I think you can be short and then look for 475. If you're, not in it and you are just watching it and you break below 480, probably going to come down here to 475 real quick, or even possibly 465, which is a much better zone of support. And if you remember, going back to the daily chart, below 465, the 200 comes in about 420. So if things get ugly and price loses 465, then down towards 420, 400. But if things perk up, you've got a decent amount of upside here with that big $20 gap. So all told, 490 to 525 is 35 bucks. That's something to play for if price really perks up. Now what I want to do, normally I would stop here. I want to run through the Spyder Etfs real quick just to see where we're at. Materials got slammed yesterday. You can see we had a potential double top here at 67. PPO high at this peak and lower at the second high. Bearish divergence on RSI and PPO was rejected. Came down here for a 50 EMA test and held. Now, if you're interested in playing this, if you get further weakness, you can get short against the 50 and then look for a move down here to the prior low or even lower. If there's a surge and it comes back up to this prior high, that would be another objective area. And then of course, if we get a breakout, if the reflation trade kicks back in and we get a breakout, then take it long. XLC, if you remember, 44% is Facebook and Google, and with those two, set to report, this is probably just going to oscillate for a couple days until that happens. But you can see we've got a triangle formed here, a breakout. You can take long and look for the prior high at 64.50, and of course, if it breaks low and loses the 50 and loses this 59.50 level, then we're going back to the September lows down at 57.50, and I would expect that would all be earnings driven by Facebook and Google later in the week. The disaster that's energy coming down towards the September low here at 28. That would be a nice area to look for a trade in energy. Either a bounce here at 28 back up to resistance, which doesn't seem like a lot, but that's $2.50 or $3. That's worth playing for. And if it breaks, then it's down to the March lows. It's pretty simple. And if you look at ExxonMobil, it's right at the March lows. A lot of big integrated oils are down at the March lows already. So if you see a break lower in oil, then and you see this 28 level go, you can mark the March low. I don't have it here, but the March low would be the target. And if there's a kickback rally to resistance, you could get long and play for that, but then put your short back on for a retracement back to those lows. That would be the way I would take a look at that. Financials rejected at 25.50, rejected at 25.50, rejected at 25.50, and now down. We've had this trading range here before at 24.25, testing the 50, and it held. You can see all these moving averages are all clustered together. Financials have really been struggling to find a direction, and it really hasn't done that. You can try to play this range if you care to, but what I'm looking for is either a breakdown below 24.25. I have that alarmed, and I also have an alarm at 25.50. If interest rates take off, that'll help financials and they'll move higher. But in this trading range, I don't see a lot to do. It's just a bunch of chop. Industrials, potentially a fake breakout with a move back into the prior trading range. It did test the 50 and held nicely and got a bounce. So here, I think 79.50 is your line. If the reflation trade, blah, 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 kicks back into gear and the market finds its footing, I think you can get long above 79.50, but otherwise the technical target here is 76 at the bottom of the box, now that it has re-entered it. PPO put in a bear cross, but still above the zero line. So from that standpoint, it's still bullish, but RSI is looking like it's making a move below 50, but at this point still holding. So finely balanced here on industrials. XLK, much worse technical posture. You had this push above the breakout and now back into the trading range, which calls into question this whole move. Deep look below the 50, got a bounce, did not reclaim it. Probably a tough trade as it stands right now. Couple different options. Wait for a kickback rally to 118, and there you can decide whether you want to put on an objective short with a stop just above, or if you're more constructive, wait for that breakout above 118, and then you can put your objective long with a stop just below 118 on that breakout. If it stays soft and looks like it's going lower, I think you can use the 50 EMA as a stop, and then you may get this move from 116 down to 112, and that would be a place, 112 to 111 would be a place where you might want to think about covering that as it comes into the September lows down here. So this is the most important sector of all the sectors. It has the highest weighting, so it's an important one to watch. And with Microsoft and the other big tech names reporting this week, that'll have a lot to do with how this one behaves in the days ahead. Staples has a double top look, and from your technical trading, just a reminder, a nice double top setup is when you've got the bearish divergence. Notice here, high in RSI, high in PPO, high in price. We've got an equal price, but a much lower PPO and a much lower RSI. That's a recipe for a double top, and you can see on 4 consecutive days it could not get through and then fell away. Probably not really a trade to take here, right in the middle of the range, but if you got a kickback to 65.50, that would be a place where you could look for an objective short to come back down. And if things get all of a sudden all bullish and it breaks out, then you could try a long back up to the highs. Very much the same deal here with healthcare. Divergent double top, pulled back. Your line to go long is 107.50. Deep reach to the 50 that held. I would be looking for something to do around 107.50, either putting on a short there or waiting for a potential breakout. But technically speaking, the target now is the bottom of the prior box at 103.50. And finally, wrapping up with XLY, Consumer Discretionary, which for all intents and purposes is Amazon at 25% of the index. It's going to be very hard for, XLY to do really well if Amazon's having trouble. So sitting right here on support at 150, I think if Amazon were to not do well and XLY drop below 150, I think you'd have a pretty nice short looking for 142.50. All right, longer video this morning. I hope the extra information was helpful. Just a quick note on positioning. As I mentioned yesterday, with the break of all key supports yesterday, I closed my longs. Going to be a defensive trader the rest of the week. We got big cap tech earnings, which could either be a blowout or a disaster. And what I mean by that is not based on the numbers, because I expect all of them to do, rather well. It's all about the reaction of the market to those earnings that is the key. And with the election, just days away, I'm going to step aside for the most part. I'm going to take advantage of the intraday volatility and grab some day trades if I can. But as far as positioning, unless I see something, dramatic, and that I mean, recapturing a bunch of levels and breaking out, I'm gonna take it easy the rest of the week. Like I said, there's plenty of intraday trading that I can grab here and there for cash flow, but stepping aside on the more duration, long exposure, and we'll wait and see. But I'm going to be doing a lot of hunting for setups because we want to be ready for any further downside with some nice short setups, and also making a list of stocks that we want to own with potential long setups after the election, when a lot of this vol will probably come out of the system and we may get some more information about stimulus and all that kind of stuff. So from that point of view, I think it's going to take till after the election to figure that out. Near term, it's all about big cap tech earnings. So I hope you found the information helpful. If you are new to the channel, please subscribe if you like the content and hit the alarm bell so you get notified when I publish. I've been putting out at least 2 videos a day lately, both in the morning and either a midday or afternoon recap, sometimes both. When markets are moving fast and there's something to say, I'll always put together a video. Check out the show notes for links to the blog site and a link to register for all my content. You'll get an email every time I publish, and also you'll get an invite link to the trading room where you can meet and collaborate with a bunch of other sharp traders in there. We've got a really nice group going. I really encourage you to take advantage of that. The people that are in there are very generous with their time and are always happy to review other trade setups and, like I say, collaborate. It's a nice community we've got going, and we'd certainly welcome you to join. So have a good day of trading. I'll talk to you later in the day. This has been Chris Buss with Traders Profit Compass. Talk to you soon.